Hi guys, so it's day 6 of my study arc. I think it was day 2. I showed you guys the chart patterns of retail trading, and I told you that I'm gonna do it later on day 2. So today is that later. I'm gonna do it today. I'm gonna give you guys a deeper explanation, where to get in on the entry, where to put your SL, where to put your TP. So every single thing you need to know about chart patterns. Most of these gurus, they only show you the pattern and be like, if you identify this here, just go long or go short. They don't like tell you exactly like how to, where to wait until the price drops back or comes up, where to put your entries, where to put your limit orders, where to put your SL, where to put your TP. So today I'm gonna, like I said, I'm gonna go into a deeper explanation, and I'm gonna give you guys the exact things you need to know. Yeah, so step by step, I'm gonna explain everything. I'm gonna show you some live examples and some sketches. So it's gonna be interesting today. So let's start with the first chart pattern. I'm going to choose double top and double bottom. I'm going to do those two together because it's the same thing, just one is bearish and one is bullish. So there's nothing to worry about. But I will give you guys few sketches because there are, if I'm not wrong, there are three types of double top patterns and double bottom patterns as well. Even though it shows that there's only one scenario in the chart patterns, there are, when you break it down, there are three subcategories. So there's nothing to worry about. It's not a major thing. It's just few patterns. uh, I'll show you guys in a sketch first, and then I'll go to the live charts for you guys to properly understand what the issue is there. First of all, we'll refresh our memories. So this is the chart patterns I showed you guys earlier. So today we are going to talk about not much. I think I'll be able to cover maybe six chart patterns. We'll be doing bearish, bearish double top. We'll be doing bullish double top because I'll be doing these two together because it's easier. It's just the same pattern upside down, and we'll be covering bearish head and shoulders. We'll be covering bullish head and shoulders, and maybe, I think it's better if I could two reversal patterns and two continuation patterns. So maybe, yeah, we'll do a bit more. We'll go for bullish flag patterns, and we'll do bearish flag patterns, and then maybe we'll cover ascending triangle and descending triangle. So we'll be covering 8 chart patterns today. So first off, we'll be talking about the double top pattern. And before everything, I'll explain what this red line is. This is going to be the main trend line, and always remember that this trend line can also be known as the neckline. This is equals to the neckline. It's just the same name, but you use a different name for this trend line. And as an additional information regarding this trend line, this trend line should always be a straight line, which means this should be always 180 degrees. Always keep that in mind because that is crucial. This neckline should always be straight. It cannot be like this, it cannot be like this, it cannot be like any in any slanted position. It should always be like this. This should be like this. It cannot do this, it cannot do this. These are wrong. These patterns are wrong. Always keep that in mind. So as you saw in the chart patterns, this is the default version of double top and double bottom. So basically we're talking about double top, so the default version would be this. But always remember there are some additional chart patterns in double top as well. I will be showing you a sketch first. So let's draw the default version. Basically what it means is the initial trend line should be in a double top pattern. It should be in a uptrend, and it's going to come back, retest, come back, touch this trend line, the neckline, and it's going to go the same height, and then it's going to break this neckline, do a small retest, and then go bearish. So this is the default version, the basic idea of double top pattern. Always remember, in this scenario it has the same height, so these are similar highs. Okay, these are similar highs, always keep that in mind. And then there is the other two scenarios. So in this case these are equal highs, and in the other example, other type of double top pattern would be, it will be starting at the same as before. It's going to be initially in an uptrend, and then it's going to make this high, the first high is done, and it's going to go and retouch, basically touch the neckline, and it's going to push a bit up but not high as the previous high. It's going to be a bit shorter, and then it's going to break the neckline, do its retest, and then it's going to be bearish. So this is the scenario number 2. So as you can see, it's making lower highs. Now I'll show you what the last type of double top pattern is. So same as the before two, initially the market is in an uptrend, it's going to make a smaller high. Now the previous one it made a higher high, in this case it made a smaller high, it came and retested the neckline, and it hunted that previous high, made a higher high, and then straight away it went breaking the neckline and redid the retest, and then it went bearish. So these are the three types of double top pattern. Just note it down somewhere because this is crucial, this is important. Even though a lot of chart patterns show you this default version, there are these two as well. Always keep that in mind. So now I will talk about these patterns. So basically, if you guys can actually see this, I mean, you should notice these patterns. This is the basic trend line, and by the looks of it you can see there are 3 touch points to the neckline. One is here, one is here, and the third one is here, just like that. One is here, the other one's here, other one's here, and the same as before, 1, 2, and 3. And let me give you some additional information regarding this. So like I told you guys before, retail trading is not 100% guaranteed, because there is a percentage of this going down and there is a percentage of going up as well. There is a probability of going up as well. So basically, for it to break this trend line and continue its path in this, basically double top pattern means that it's a reversal pattern. So initially it was in an uptrend, and then after the trend, after these two highs, it's going to be in a downtrend. So the probability of making it a downtrend is basically is in a 68%, and there is a probability of this not actually retesting the neckline. It breaks in and it just keeps on going up. So there is a probability of 32% of that happening, and it's equal to these two as well. So I'm not gonna waste your time just trying the same thing over and over again. Just keep that in mind. This is not 100% guarantee. Even if this trend line is broken, it's definitely going to go down. There is 68% chance that it goes down and a 32% chance going up as well. Now comes to the important part where I show you where to get in on this entry and where to put your stop loss and where to put your TP. So, like I said before, I think it's better if I talk about this part first. This retest is extremely important because even though I've shown you that this in this case it's a clean retest because it just went here, retested on the exact point where it touches the neckline, and it went down. Now there are scenarios like this as well. Do not think it's not going to happen, because there are scenarios just like this. But there are, I mean, I haven't told you guys regarding the liquidity and all that. Just wait till we start smart money concepts, SMC, because there are stuff called liquidity over here, because a lot of retail traders take shots from here. So the market tend to hunt their stop losses. So that's what we have to be extremely careful of, because we do not want to lose money. That's the whole point of learning something. So basically there are liquidity here. A lot of traders just put a tight stop loss somewhere over here and get in on this entry. They do not wait for the confirmation. So because of that, the market just keeps on going up a bit further than the neckline, than this trend line. So it just goes up a bit, hunt their stop losses, and then continue on its path. Okay, so always keep that in mind. It might not be a clean retest. It might be a clean retest. Always wait for your confirmation. Now I will show you how to get that confirmation. So this is the equal high double top pattern. This has the same height in these two highs. So there's nothing to worry about. I will give you the example in the default version. So like I said, this, I will give you the two scenarios as well. This might retest from here, from the neckline itself, or else it might go up and then go down, or else, so there are just three scenarios. It might just go up and then retest here, and it continues it's on its path. Okay, so there's a 32% of this happening. So we are not going to talk about it. If it goes up, it goes up. We cannot do anything about it. Let's talk about these two. Okay, so if this happens, always keep this in mind. Do not panic and blindly put your entries just short from here. Do not blindly short from here. Always wait until it just goes down and until it retests. Always keep that in mind, because that's the crucial information. You need to get it. You need to get that into your head. Do not panic. Do not panic sell. Do not think that if I sell from here, I can make a few more bucks. Do not do that, because you might lose your money. So let's type these 3 points. I'm going to talk about these three. So basically, like I said, wait till it goes up and do its retest. It might be clean, it might not be clean. Just let it go up. Be patient. Be patient, because that's what we need. Be patient. Wait for that. Until it's gonna come down. If it is actually, the market is actually gonna be bearish, it's definitely gonna go down and hunt this low. All what you have to do is give it some time. That's it. So what you have to do is get your entries. Get your entries. If you are actually like waiting for the entry and looking at the charts, you can short from here, or else you can put your limit orders from here. So once this low is hunted, the limit order in automatically it gets triggered and it's going to be in the position, so there's nothing for you to worry. So this, in this case, we are actually going for a short, so let's get the short position and we are going to put our entry here. Right, so as you guys can see, I'm going to put my entry here. The stop loss we'll keep it somewhere over here, TP will keep it somewhere over here because it's easy, it's not close by. So the entry is here, and now, like I said, this, after making a low somewhere over here, the market is gonna go do its thing and it's gonna reverse from some at some point, okay, and hunt this low. Wait for that high to happen. So once that high is formed, we have a clear idea where to put our SM. So let's say in this case it went here. The market went for the retest, but it was not a clean retest, so it went up a bit, passing the neckline, and it went here. So now we have a clear idea where to put our stop loss. So bring the stop loss to the high, to that high. So now you guys have a clear idea where to put the stop loss. It's gonna be to this high. Okay, and now comes the TP. Remember, I talked about the highs, the heights of these highs. So basically, you always go for the tallest high. So in this case, these, the both highs are in the same high, the same level. So we do not have to measure them properly. So get one of the highs and put it to the point where it broke the neckline. So right over here it broke the neckline. So now from here to here you need to bring your stop loss, sorry, bring your take profit to that level. Okay, always keep that in mind. Bring the height of this to the point where it broke the neckline, not the entry point, to the place where it broke the neckline, and bring your stop take profit here. Now I will show you for how to take the TP for these two scenarios as well, because that's the important thing, because you know it's where to get the entry, where to put your stop loss. The only thing is where to put the TP. So it's completely easy. So always go for the tallest high, put it the point where it broke the neckline. Always remember, always put it to the point it broke the neckline. So now we know where to put the entry. Bring the TP to this level and then bring the stop loss to the retest level and the entry at this point. And then we'll go to the last one. I mean, I know some people might not think that this is a double top pattern, but there are scenarios where the market makes this kind of stuff. I mean, we should always be like, we should always know what the market's gonna do. If we need to, like, if you guys are actually looking for retail trading, so there are scenarios like this. There are some few examples, and right now I will show you where to get in on the entry and how to put the stop loss, where to put the TP. So just like before, there's nothing for you guys to worry about. So like I said before, always when you're waiting for the TP, always go for the bigger high, the tallest high. You get that, and then you put it to the point where it breaks the neckline. So now you have a clear idea where to put your TP. Your entry is going to be here. You bring the stop loss to the retest point, and now you bring your TP to this height, to this level. And now I have completed the double top formation and all three types of double top formations: lower highs, equal highs, high highs. So just note it down somewhere or get it to your head. Try these because there are examples in the live market. Now, like I said before, the third one, the third example where I showed you high highs formation, where the mark, this is the neckline. This is the neckline, and it makes high highs, and then it does a retest and then just goes down. So this is the idea, high highs. So I will show you some examples. One a big example here. And right now, here, when you, as you guys can see, it has made high highs. It made, this is a low high, and it made a high high, and then it basically went down from here. I mean, here, can you guys see that there's no retest? Hmm? There's no retest here. So always keep this in mind. I'm going to give you some crucial information regarding this. In retail trading, if there is no retest, do not panic. Do not panic and enter in to the trade thinking, it's gonna, I'm gonna miss out. Do not do that, because if you do that, you're going to lose money, because there is no point where you could put your stop loss. It might go further up. If by any chance it's going to go for a retest, it might just go somewhere over here and then continue in its path. So if we put us getting on this, on our entry somewhere over here, we do not have enough money for us to hold it until the stop loss, until the retest is done. Now let's dig deeper for us to identify some more examples, because the hardest example is the one I showed you guys earlier. The rest is extremely easy to find. I mean, there are scenarios where it doesn't work as well. When you look at this, just like before, the first one's the low high and the second one's the high high. Even though it made a break, it did not follow through. Even though it made a break, retest, and it hunted this low, it did not follow through. It just went on going up. Like I said before, retail trading is not 100% guaranteed. So always be careful. Always use retail trading with another strategy. Then you can get a 90% success rate. And there you go. There's another example for double top patterns. It did the retest from here to here, and then it went down. So always be mindful, always be careful of this retest. And there you go, there's another clear example. The first one's a high high, the second one's a lower high, and there you go. Just like before, there's no clear retest, so no entry points. There's nothing to worry, but I mean, there are plenty of these chances in the market. Do not panic. We are here to play the long game, not the short game. And okay, so we have talked about the double top pattern. This formation is done. Now we are going to talk about the bullish double bottom. So right now we are going to talk about the double bottom pattern. So just like the previous pattern, this also has three types of double bottom patterns. The default version of this pattern is also the same height lows. Let me draw it out for you. So basically, initially it has to be in a downtrend. and then it makes equal lows, and then it breaks its neckline, then retests it, and then it goes in an uptrend. This is the first scenario. Let me show you the second scenario. Like I said initially, in a downtrend, the first low is lower than the second low, breaks the neckline, does its retest, and goes up. And then the last scenario, the first low is gonna be higher than the second low, then it goes up. So these are the three scenarios, three types of bottom patterns. So just like before, there's nothing for you to confuse yourself. Let me explain where to put the entry, where to get in on the entry, where to put the stop loss, where to put the TP as well. So there's nothing new compared to the previous one. Basically, it's just the same, only the pattern is upside down. That's it. So let's talk about the equal lows pattern. So in this case, we are going to use a long position. So we'll keep it over here for now. And we'll type out the crucial points we need to talk about. We need to talk about the stop loss. We need to talk about the entry point. And then we need to talk about the TP. So these three are the crucial points we need to talk about. And just like before, always keep that in mind. This retest might not be clean. It might go a bit further down and then continue on its way up, or else it might just go even lower and keep on going down. So right now we're not going to talk about this, that 32% of going down. So because that, if that happens, we cannot do anything about it, so we'll just clear that out. So like before, so right now we'll say, just like before, we'll say that the retest actually went a bit higher, a bit lower than the clean retest. So it went here and then it went up. So this is where we put our stop loss, and this, basically this point, is where we put our entry. So let's drag this in. We'll drag the stop loss here, entry is gonna be here, and where are we going to put the TP? So just like before, as these are equal lows, we are going to get one height, the height of one of these lows, and we are going to put it to the break point, the point where it breaks the neckline, and from here to here is going to be the profit level. So if we enter from here and the stop loss is going to be here, the TP is going to be here. So take the TP levels and drag it out until the end, and that's it. So this is the TP, this is the entry, this is the SR. So always keep this in mind. This is how you get in on an entry when you're going for an equal lows pattern in a double bottom. Just like these, let's go for the lower lows pattern. So this is lower lows, and like I said before, we are gonna get the, you know where to put the entry, you know where to put the stop loss. So I'll just show the TP levels. go for the lowest low, get the height of that, and get the height of that, put it to the point where it broke the neckline. It broke the neckline right over here, so we put that length from here to here. Now we have a clear idea where to put the TPs. Bring the TP here, bring the SL here. So yeah, this is how you get in, how you put the entry here. Stop loss here, TP is going to be here. So that's how you get in on the entry if you see a lower lows pattern. And now we'll go for the higher lows pattern. So just like before, entry is going to be here, the stop loss should be here to the retest point, and now I will show you how to get the TP margins. So go to the lowest low, get the height of that, bring that level to the break point of the trend line, the neckline. So basically this is gonna be a TP here. So yeah, that's the basic idea. Always keep in mind, if there is no retest, there is no entry, so you do not get in on that entry, you do not get in on that trade. Always keep that in mind. So yeah guys, we spoke about bearish double top, and then we spoke about bullish double top. So those two are done. Now we are going to talk about let's talk about, yeah, we'll talk about ascending and descending triangles. So we'll be talking about this first. We'll talk about the ascending triangle, and then we'll go for descending triangle. This basically is our topic right now. There's nothing much to it. There's no multiple chart pattern types. There's only one. So first we'll be talking about the ascending. Always remember, in ascending triangle type, there is a 180 degrees line, basically a straight line on top. Always keep that in mind. So the chart pattern is gonna be like this, and then the trend might actually come from here, or else it can actually come from down as well. It doesn't matter. If the actual chart is gonna be like this, so let's start with this. It's gonna go to this, and if the pattern looks like this, making the top line a straight line, 180 degrees line, and the bottom line is gonna look like this, then you have to get the understanding that it is a ascending pattern. And then what it's gonna do is it's gonna break this top trend line, it's gonna do its retest, and then it's gonna go up. So this is ascending trend line, ascending triangle. Sorry, I just forgot the triangle. This is going to be the ascending triangle. Okay, so there's nothing much to it. Just like before, I will be showing you guys where to entry, where to put your entry, where to put your stop loss, where to put your TP. So let's get this in a cleaner form. So just like before, there is a percentage, basically a probability that it goes up and it goes down. So the probability of it goes up is the percentage of it goes up is 68%, and there is a chance of it going down as well, that is 32%. So in this case, I will basically will get rid of the lower part. If it goes down, it goes down. I'm not going to talk about that because basically this is we are talking about the ascending triangle. So all the only movement which matters is it going up. We're not going to talk about the downtrend. And then let me talk about where to get in on this entry. Just like the before, all these entries you need to wait for the retest, because the retest is crucial. The retest is extremely important. Now in this case, the market is in an uptrend. It's making high highs, high lows, and then it goes for a retest, and then it just goes up. So what you have to do is you wait until you always have to be patient. You have to put your limit orders here, and then this wait for the retest. This might be clean, this might not be clean. Always keep those points in your head. The retest might be clean, might not be clean. So always wait for this move. You put your entry here. You wait for that movement that it goes up and hunt this high. So basically if that happens from over here, you know where to put your stop loss. Now let's get the long position so I can show you give you an example where to put the entries and the stop losses. Bring the stop loss to here so you have a good idea. And then so basically for the TP, you need to wait until, let's say it comes from up, it comes from here, and it makes a low from here. So basically if this happens for the TP, you have to get the length from the top trend line to this low, and you get that line, put it to the breakup point, the break point where it breaks this trend line, and then you have the slight idea, you have a good idea where to put the TP. Now drag this out to that level. That is where you put the TP. A clear example is actually above the chart, above the sketch. So that's actually, you guys are lucky. So let me draw it out. So this is gonna be this. So in this ascending triangle patterns, it's really hard to actually get a good reading, a good sketch. If you are trying to use my method and use only wicks, so in this case you have to go for the bodies. I don't usually trade in these markets because I'm not quite sure that it's gonna actually work. So there you go, that's a good example. The market was initially in a downtrend, it did this, gave a breakout, gave a small retest, and then it just went up. That's a good example. So right now we're going to talk about the descending triangle. Let me mark the chart pattern. So basically we did talk about this, ascending triangles done, and now we are going to talk about this descending triangle. So these are the two trend lines I'm going to talk about. So always when I was talking about the ascending triangle, I told you guys the top trend line should be 180 degrees. That means it should be a straight line. Now in this case, in the descending triangle, if it's going down, the bottom trend line should be 180 degrees. This should be a straight line. It should be 180 degrees. Always keep that in mind. Actually, the trend can come from the top or else it can come from the bottom. Whatever it is, it should be doing this and break the lower trend line, do its retest, and then go down. So that's what it's descending, so it should be bearish at the end. So let's make this a cleaner setup. Just like before, there is a 68% chance of it actually going its original way, the proper way, descending triangle. It should go down, or else there's a 32% chance of it actually going up. So there's nothing to worry about. I will show you guys if it actually breaks this lower trend line, it actually goes down, where to get in on the entry, where to put the stop loss, and where to put the TP. So basically, let's get the uh, okay. So right now, I will show you where to put the entry. So always wait for the retest. I've been telling you guys since this video started. Wait for the retest. Wait for it to hunt your low or high. Wait. In this case, you have to wait until this low is hunted by the market. So basically, the entry is going to be here. So bring this, put the entry here. No. So in this is actually a short position, so it was my bad. So bring the stop loss here. Now you know where to, after the retest is done, you know where to put the stop loss. So the stop loss is going to be here. For the TP, you need to get the height from this point to this point and put it to the place where it broke the below trend line. So now this level is gonna be your TP. So yeah, that is how you are going to put the stop loss, entry, and TP in this descending triangle scenario. So basically we finished ascending triangle and descending triangle as well, so we'll mark it here. So this is also done. Now I did two from reversal patterns and we did two from continuation pattern. So we'll again go for a reversal pattern. We'll talk about bearish head and shoulders, bullish head and shoulders, these two. First off, we'll start with basically the bearish one. We'll be talking about this first. So basically when we talk about the bearish head and shoulders pattern, there are it is what it looks like. Okay, so basically it does this, it does this, and it does this. So the basic idea of it is these two are considered as shoulders. So in a human being there are two shoulders, and then this is considered as the head. The big one is the head. Okay, that is the simplest definition for it. So it is easy. There's nothing there's no complication like the previous patterns. This trend line is the main trend line. This can be slanted, this can be slanted like this, or I mean I've never seen something like this, but it is possible. It can be like this. Always keep that in mind. It can be, it can do this, or it can do this as well. So just keep these two in your mind, because these kind of scenarios are actually possible. Now in this case, I will show you guys how to get in on a trade in these if you see something like this. So now by the looks of it, you can see that this level is gonna be a TP. So we'll keep it there for now. Now I will show you where to put the entry. Now in this case, if this kind of formation is shown in the market, you have to know for sure that it's going to be a short position. Okay, so we'll keep it here. Now for the stop loss, we'll always wait for the retest. Now after it breaks the main trend line from here, you have to wait for the market to shift up, go for its retest, and then only you are going to put your limit orders here. You are going to put your limit orders here at this point. Okay, and then you put your limit order, wait for it to get hunted. So if this low is hunted by the market, automatically the um, limit order will be triggered. So then you know that the trade, you are in a trade. Now you go to the market, you bring your stop loss to this level, to its retest, and for the TP, like I mentioned before, you bring this level to the break point here, which is here, and then you bring your take profit to its lowest level. Now you have a clear idea where to put the entry. So this is the entry, this is the entry, this is the stop loss, and this is the TP, right? So yeah, for this I will give you a good example in a coin called XRP. There you go. By the looks of it, you cannot see anything. Then after I draw this pattern, this trend line, then you get the clear view. So basically this is one of the shoulders, this is the second shoulder, this is going to be the head, and then from here to here is going to be the TP level. You bring that, put it where it actually broke the market, and there you go, that's your TP level. It actually went a bit further as well. So you need to make it, zoom in. This is where it actually broke the market, but for the retest it went up. So this position, you put your entry, the limit orders here, and you wait for it to get hunted, and then this is your stop loss is here, and your TP is gonna be way down here. See how it actually worked. That's why I tell you, if you actually keep on practicing retail trading, you can make money out of retail trading, right? This is a good example for head and shoulders pattern where it actually went bearish. So let's go to the chart patterns. So what we did was bearish head and shoulders, we talked about that. Now we will talk about bullish head and shoulders. So when we talk about the bullish head and shoulders pattern, it's just like the before one. The only difference is this is upside down. So let me draw it out for you. So initially the market should be in a downtrend. It makes a smaller high and it breaks it, and then this boom, it does a retest, it goes up. Like I mentioned before, these two are going to be shoulders, and this is going to be the head. Okay, it's simple. Like I said, it's extremely simple. These are just chart patterns. We learned these when we were actually in kindergarten. So these are extremely simple. It's just that you need to know where to put the entries, where to put the SL, where to put your TPs, how to get the TP levels. So those are the main points you need to get. So practice makes you perfect. Go ahead, practice every single day until you actually seriously get in on trading with actual money. So let me show you, just like before, where to put the entry level, how to get the TP levels, where to put your SL. So beforehand, when you see this chart pattern, always get the level from the trend line to the actual wick, the actual end of this level of the head. Go to the wick, not the body, go to the actual wick. You keep this, you keep it ready once you get in for the trade. So like I kept telling you guys, wait for this, retest, wait for this retest, keep a limit order here, and then once it is triggered, you bring your stop loss to its retest level. So in this case, this is going to be a long position. Now after after your limit order is triggered, you bring your stop loss here, and for the TP you bring this level, let it sit right on top of the breaking point of this trend, and you bring the TP level to its every end. Now you know where to take all your profit out. So this is the basic idea of bullish head and shoulders pattern. There's nothing much to it, just like I showed you earlier. There are plenty of examples in the market. I'm not going to bore you with anything because I showed you examples for the bullish one. It's just the same thing upside down. So let's go on and talk about the last pattern I'm going to talk about today. So basically, we talked about bearish head and shoulders, and now we finished off bullish head and shoulders. So right now we are going to talk about the flag patterns, and let us start off with bullish flag pattern. So basically the bullish flag pattern is it explains every single thing you need to know when you read the name. So it's going to be just like a flag pattern, and these two are going to be trend line. This is going to be a trend line as well. These two trend lines should be parallel to each other. Keep that in mind. These two should be parallel to each other, and then the market should, it should initially, if it's a bull flag, it should start with a as an uptrend, and from here itself it does this, just bounce up and down through the support, through the resistance, and then it's going to break the resistance level, do its retest, and then it's going to go up. Okay, always, I mean, there is a point, there is a reason why I painted this line in a different color in red. Let's get this level for a later explanation. We'll keep that ready for now. We'll make that also red. Okay, so these are the main points of how to put your TP, where to put your entries, where to put your stop loss. There's nothing much to it. This is extremely simple compared to the rest. So let's talk about something else. There is only one tricky point where, if by any chance, let's color this in a different color. There are times where the market actually tries to break out, and it might give a double top pattern, or else it might give a head and shoulders pattern, and the market actually fails to break above this point, this trend line, and it just straight away goes down. There is a scenario like that. So we call that fake outs. Fake outs. These kind of scenarios are known as fake outs. So this is the only thing we have to be extremely careful of if you are going for a trade, going for an entry in a bullish flag pattern or else in a uh, bearish flag pattern. This is the tricky part. And just like before, if you are trying to get in on an entry, in this case we are going for a long position, so we'll just keep it ready for now. So the entry is gonna be just like all the patterns before. You wait for the retest, wait for this level to be hunted, and then you have a clear idea where to put your entries, the limit orders. So you put your limit order here, and then once this shifts going back up, you bring the stop loss here, and then for the TP, now we are going to talk about this. So initially, the market might be actually in a downtrend, in an uptrend, and do this. It might just be like this and shift from it to like actually go up in an uptrend. It might come either way. That is not the issue, but from here, this should be basically a set of green lines. In this case, we are actually going for a bullish flag. So what I give you as uh, advice is what I've been through throughout the market, throughout my journey. So just get it to your head, because these lines, sometimes, most of the time, it's just gonna be a set of green lines. It's just set of green lines because the market is extremely bullish. So what we are going to do is, we are not going to just get the green lines. We are going to get the low from the low itself before it started being extremely bullish. From the low itself, we are going to get the length from there to this level, high this high itself, the first high of the bull flag, the first high of the bull flag. So extend this, length to this low, and that low is gonna be from that low to this height. This high is gonna be our TP level. But now in previous patterns, I told you guys you have to put the TP level to the breaking point. But in this case, we are not going to do that. We are going to get the length from that low, this low to this high. We are going to put that to the lowest low of the trend. It should be inside the bull flag, the lowest low of the bull flag. That means this. Then you have a good idea where you are going to put your TP. That's going to be here. I mean, you guys might not understand because even I'm doing this for the first time. I'm telling you guys because I've never taught anyone else. This is the first time I'm trying to teach you guys, because basically it's not me teaching. Um, I'm telling you what I learned today. So basically, I learned this today again, because I mean I started doing the course again. So this is what I learned. This is what I'm telling you. So basically, this is me telling you guys what I learned. This is not me teaching. So this is gonna be RTP. This level is gonna be RTP. This is gonna be a TP. and you know where to put the stop loss. This is going to be our entry. That's it. So that is a good idea of how to get in on the entry, where to put the stop loss, where to put the TP in a bull flag pattern. And let me give you guys an example in the live chart. So this is Ethereum, and by the looks of it, I know you guys can't identify what kind of patterns they are. So let me draw some trend lines, and then you will get a slight idea what I'm talking about. So right here is gonna be, okay, so there you go. It looks just like the bull flag I was talking about. The market went here, it did this, and broke it, and it went down for the retest, and then it just went up. So just like that, I will show you guys in a live market how to go for the long position. So just because it hunted this trend line, do not get in on a trade. Now even if you, let's say you panicked and you put a limit order before even it hit this trend line, you put it over here and you put the stop loss extremely tight. Look at the retest, look at the retest, how long it went. So what I'm telling you is, wait for this, wait for this low, wait for this high to be hunted by the market. Then you have a good idea where to put the stop loss. Bring the stop loss here and wait for it to go up. Just look how long it, I mean, it's still going up, I think. Yeah, it's still going up. And look at the TP levels. I told you guys where to get the TP from here to here. Get the TP levels and put it below to its lowest point in the bull flag. Just look at it. Just look at it. It we followed every single rule I just told you, and it hit the TP as well. So right now we finished bullish flag patterns, and now we are going to talk about the last pattern we are going to talk about today. So bearish flag pattern. So initially the market should be in a downtrend, and then there should be two trend lines. Let the market play out. Do not panic and start drawing stuff. Let the market play out so you get a slight idea of what kind of pattern it's going to be. Try drawing different patterns so you get the idea of what kind of pattern it's going to make. And then the market makes these kind of highs, these kind of lows, high highs, high lows, and then at some point it's going to break the lower resistance level, and then it keeps on dumping. Right. So in this case, like I told you about the bull flag pattern, it's the same principles, same scenario. You have to apply every single thing I told you in the bull flag to the bearish flag as well, because it's just the same pattern, just upside down. There's nothing different. So basically this is going to be TP level from here to this low. This is going to be our TP. This is going to be our TP levels, and after it breaks from here, it needs to do the reverse. It needs to do the reverse for the retest. That is how we know there is a clean entry. So then you guys need to know we are going to get the short position. Then you guys need to know There is a clean position over here, so we need to put the limit orders here and then wait for it to actually come down and hunt this low. So once it hunts the low, it just breaks the market and it goes bearish, fully bearish. So then you have the slide idea. You basically have the big idea where you're gonna put the stop loss. And then, like I told you about earlier, this length is gonna be not here, but here, from here. And then you know where to put your TP. This TP is gonna come here. There you go. So let's make this red. So there you go. This is the length. It's extremely simple. There's nothing extra for you guys to learn. Just like before, the one before flag pattern, there might be a fake out. I mean, there are scenarios like this as well. Let me tell you that as well. Let's color this in another color. So there are times where these actually there's different kind of fake outs. Okay, so the market might do this, break this, and do a double top pattern or a double top pattern. Might, I mean, there is another uh, pattern type called cup and handle pattern, which I'll be talking about later. So it might do this and then it goes up, or else sometimes there are times where the market actually makes head and shoulders patterns. So it actually fakes us who are actually waiting for a trade somewhere over here, and then it goes up. So like I said before, we always wait for a confirmation over here. Okay, so we a lot of retail traders put limit orders somewhere over here, putting waiting for a market change. Now in this case, in these kind of fake outs, it hunts us as well. So those are different kind of scenarios where the market actually tricks us. So we have to be extremely careful if you are actually trying to earn money only in retail trading. So always be mindful. And we finished the last pattern as well for today. So we finished 8 patterns. Just try to practice these patterns. Try to identify these kind of patterns in the market. And some examples: do not live trade right now. Do not lose all your money. I mean, if you are actually if you have a slight idea of trading, and if you have a good idea of patterns, maybe sure, go for it. But what I'm trying to tell you is, always try trading in demo accounts and master this skill. So because it becomes easier to identify fake outs and good entry points, where to put the SL. All right, guys. So that's basically the start of all the patterns we talked about earlier. I mean, there's a lot more. You saw in the chart. There's a lot more. We have a lot to cover. Um, so this time you did not just see what they look like. I gave you where to put the entry points, where to put the SL, where to put the TP, and I showed you guys that it actually works in actual live charts, and I gave you some good examples. So basically we talked about double tops, double bottoms, head and shoulders, ascending triangle, descending triangle, bull flag, bearish flag. So we covered all that. And remember, these patterns do work in retail trading if you trade them with structure and mostly patience. It's not about catching every move, it's about catching the right ones. If you found value in this whole video, drop a like, drop a comment, um, follow, and maybe share it with your friends, because this is not me trying to be all like all those other gurus. I'm trying to share my knowledge with you, so you don't have to actually pay for a course. um, so that's how it is. I mean, every single day I'm learning something new, and I'm telling you guys as well. So don't worry, don't forget, tomorrow's video we are going to continue the study arc, and we're going to get into deeper trading stuff, and how the market sets, the market works, market's behavior. So that's it for today. Thanks for watching, and see you guys tomorrow in day 7.